the iron condor, not just the theory, but a live setup and what exactly you could look for. Iron condors are often pitched as safe premium strategy, limited risk, limited rewards. Just sell two of those spreads and chill, right? But here's the truth. Iron condors only work when placed with a purpose, with a read on volatility, proper strike selection, and a real edge. Otherwise, you're just flipping coins. Let me bring my screen and jump into it. All right, as you can see on the Sensa Edge I opened here, you can go into the option strategies. You can select from any of the 100 plus pre-built strategy. I've selected Iron Condor and Baba right here. So here in this case, Iron Condor involves selling an out of the money put and call, then buying further out of the money wings. You profit if the stock stays between your short strikes by expiration. Simple, right? But it's not magical. The tighter your range, the more credit you collect, but also the more you risk it moves. So here, if you can see here, debit loss and profit in this particular case, I'm selling 114 put and selling 124 call. If I reduce this, you can see the credit numbers increases. Again, so here currently again, Alibaba trading at $119. We are shorting 114 and 124. We are buying a put, which is 109 put and 129 call. You get a credit of 215, which is shown here, and you're risking a maximum loss of 285. The break even in this case is anywhere between 111. If it goes below that is when you get into the red zone or the loss, or anything above $126, which is where you get into the red zone, which is the loss. So you are expecting a neutral. So as long as this particular trade stays between 111 and 126. So what exactly the setup, what exactly you will look for here, right? There are multiple things, volatility and theta edge. As you can see in this particular Greeks here on the right side, the theta is 1.83, which is right here. You can see here, which shows it's a strong time decay, which works in your favor. As each day passes and the stock stays within the range, this trade earns money just from the clock ticking. The vega, which is right here, which is 3.23, Iron Condor benefits from the falling implied volatility. We are short vega, so we want volatility to come down. If it does, option price shrink, and we keep more of that credit. So in this case, as you see, maximum loss and maximum profit, the risk to reward is somewhere between 0.75 to 1. Decent for a neutral setup. Positioning between 114, as we saw here, and 124, which is in a tight 1 standard deviation. If I can adjust this particular range, I can see the standard deviation showing up in this particular graph as well. The range captures where the Baba has recently consolidated. The wings are placed to give enough breathing room, and the risk is strictly defined. The second thing is the probability and the Greek insights. Delta here in this case is at minus 2.6, meaning this trade is mostly market neutral. Net delta is nearly neutral, good for non-directional. The third one, the probability of profit, which is right around 68% in the range. So which shows that we're not gambling on a big move. We are betting on stability, and the probability support that. The wider the range, the lower the payout, but the higher the chances of success. And the most important is the market context. Baba's been trading sideways if you look into the graph for the last 5 days with no major news catalyst. Volatility is moderate, ideal for premium selling. With earnings out of the way for Baba and no anything headline risk, the setup lets us get paid for being right about nothing's happening. That's the beauty of neutral trades. If Baba stays in this particular range, the payout max profit, and we didn't guess, we map support with the volatility levels and the market tone. Always trading defined risk and sizing properly. Iron Condors are not infinite money machines, but when we use it wisely with volatility awareness, sizing discipline, and the real probability math, they can be a good workforce or workhorse in your playbook. And if you're using tools like SensaMarket, you're not guessing, you're trading with structure. That's the edge. All right. Hope that was helpful. All right. Thank you for tuning into the Sensa Edge. Again, subscribe, share, and always remember, it's not about collecting credits. It's about protecting capital and keeping your edge sharp. Thank you all for watching.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.